Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, Professor of Economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for coming on today.
Good afternoon, Devin.
Well, let's start with Wall Street, where stocks bounced back overnight after several sessions of decline. It seems that was helped by the reports of Russian troops backing off from the Ukraine border. On the other hand, another sign of very high inflation in producer prices. What's the story in the global markets?
U.S. stocks rose Tuesday by discontinuing a three-day losing streak. Energy prices slumped and benchmark 10-year Treasury note yield increased up to over 2% after Russia said it had pulled back some troops from the Ukrainian border. This allayed some fears about conflicts between the two countries. The blue chip Dow Jones Industrial Average gained 1.2%, while the tech-heavy Nasdaq Composite added 2.5% on Tuesday. The threat of war between Ukraine and Russia has, in recent days, added a geopolitical element to an already complex market outlook. Investors also have been weighing inflation concerns as well as signs of easing supply chain issues. Asian stock markets also gained today due to Russia's pullback. Japan's Nikkei gained 2.2%. Hong Kong's Hang Seng Index also gained 1.3%, and mainland China's Shanghai Index gained 0.5% today.
And a similar story today in Korean stocks. The KOSPI up almost 2% today, and the KOSDAQ almost to 4.5%, a rebound for many of the names that were down in recent days, like Kakao and Kakao Bank. The game maker WeMade up by double digits today. Tell us about the domestic market.
Domestic market declined due to the geopolitical factor of Ukraine over 3 straight days until yesterday. But as the tension on Ukraine weakens, domestic market rebounded in a larger scale along with global market. The benchmark KOSPI gained 2%, and KOSDAQ also gained 4.6% today. Most of large cap stocks traded higher today. Samsung Electronics advanced by 1.5%, and the second largest cap stock, LG Energy Solution, also gained 0.9% today. Institutional investors led KOSPI market rise by net both about 230 billion won. In KOSDAQ market, foreign investors net both by 280 billion won and led the huge rise of the KOSDAQ.
Well, looking at the semiconductor industry in particular, the website DRAM Exchange has an index for DRAM prices and general industry trends. That's the DXI. And in the past week, it's up 1.7%. Many had expected a downturn in the chip industry this year, but now there's more evidence that we could be going into another super cycle instead. What do you make of the situation, Professor?
Actually, a memory chip is the single largest export item of Korean economy, which covers about 20% of total export. So Korean economy is relatively more sensitive to the situation of global chip market. The global chip market boom over COVID pandemic made an underwhelming sales and profit of Samsung Electronics and SK Hynix last year. After experiencing unexpected huge boom in global chip market over pandemic, there has been a rumor that the global chip market would be collapsing because of the overproduction of chips. But recently, memory chip spot price increased by 2 to 3% in the first week of February, and the DXI index, which is the global memory chip prices index, also advanced by 3.7% in the same period. All these memory chip price changes could be a signal of another boom in memory chip market. Actually, major memory chip manufacturers like Samsung Electronics and SK Hynix investment on new facilities are delayed due to global production chain disruption. This is another factor of rising memory chip price for this year.
Well, if we could talk about those employment numbers, last month, the number of people employed in Korea rose by more than 1.1 million. That would be the biggest increase since March 2000, when Korea was coming out of the Asian financial crisis. The unemployment rate among young people declined 3.5 percentage points. What's behind this rebound in jobs, and what do you take away from the data?
In January, the number of employees increased by over 1.1% million on year, which is the largest annual increase in 22 years, as you said. This employment increase is mostly fueled by government's temporal job creation through 6 times of supplementary budgets over 130 trillion won in 2 years. There was also a lower base effect in employment measure because the employment actually decreased by 1 million in January last year, 2021. Among different age cohorts, we see the largest employment increase is in over 60 years old category. But it should be noted that what we say decent jobs for young workers are not provided enough these days because private sectors are still hesitating to hire more college graduates over ongoing pandemic and uncertain future businesses.
That does seem to be the case. And finally, Professor, the number of foreign nationals who came to Korea last year as tourists, hard to believe, but just 1.5% of the number we'd seen before the pandemic. And the biggest proportion of them were from the United States, followed by the Philippines, Indonesia, China, so on. Reports say in the district of Myeongdong in downtown Seoul, which used to be so big for tourists going shopping, more than half of the commercial properties are now vacant. Similar stories wherever tourists tend to go. What kind of impact is this actually having on the Korean economy?
The sightseeing industry is one of the hardest hit by COVID pandemic in the last 2 years. As you said, Devin, the size of non-business travelers from foreign countries decreased by 98.5%, which is almost 100%, compared to that of before the pandemic in 2019. We used to have the largest foreign visitors from China and Japan before the pandemic. But thanks to very strict entry into and departure from the 2 countries, non-business visitors from these 2 countries became almost zero. Since sightseeing industry has a strong backward and forward effects between industries, this serious shrink in sightseeing industry causes further shrink in hotels, restaurants, transportation, and so on. This gloomy situation in sightseeing industry will be continued until COVID pandemic disappears.
It does seem that way. Professor, we'll have to leave it there for today. Thank you as always for sharing your insights with us. We appreciate it.
Thank you very much.